I'm Sarah Borkson-Keto here in San Francisco for REITworld 2018, NAREIT's annual conference. I'm joined today by David Helfand, President and CEO of Equity Commonwealth. Welcome, David.
Thank you very much.
So Equity Commonwealth has disposed of approximately $1 billion in assets this year and over $6 billion since you took over in 2014. What impact has that sale of assets had on the quality of the remaining portfolio?
We've gone from 156 assets to 11 as we sit today. And we basically sold what we thought were the least desirable assets, and we've left the best assets. So today the portfolio is focused in Bellevue, outside of Seattle, Austin, Denver, Boston, DC, and Philadelphia. So it's a higher quality portfolio, better physical assets, better markets, and we really like the portfolio as we sit today.
And Equity Commonwealth has generated a large cash balance from these sales. What do you plan to do with that $2.6 billion figure?
Well, that is the question, isn't it? We've sold just over $6 billion in assets since we took over in 2014. We've relieved the company of $3 billion in liabilities, so we have $3 billion of cash on the balance sheet today. And what we're searching for is an opportunity to invest that capital thoughtfully on a risk-adjusted basis where we can create attractive long-term returns. We've yet to find that opportunity, but we continue to look.
And what are some of the ways that Equity Commonwealth is looking to create value through aggressive leasing and creative asset management?
Right, so that's a big focus of the company, is taking the assets we have, creating value through entrepreneurial leasing, creative asset management. And maybe two good examples are, in Philadelphia, we have a trophy office tower, 1735 Market. It's 1.3 million square feet on Market Street, right next to the Comcast campus. And when we inherited the building in 2014, there was about 400,000 square feet of leasing to stabilize the building. And we installed an amenity floor, spent about $5 million, put a rooftop deck in, and that amenities plus the management of the building attracted enough tenancy to now stabilize the building at 91%, and we're in the market to sell that asset. So that was a good example of our asset management capability. Another example of value creation is we have in Bellevue, Expedia's headquarters. Their lease expired and they were moving to South Lake Union. So we had a 400,000 square foot pending vacancy, and we successfully leased the entire building to Amazon last quarter, creating substantial value and saving us significant capital costs.
And finally, how would you describe operating fundamentals across your core markets?
Operating fundamentals across the markets are, I would say, decent. There are signs of a little bit of fatigue in terms of the cycle. Demand remains decent. I would say on the investment sales side, things have gotten a little softer, not meaningfully, but we're late in the cycle. Interest rates have risen 70 basis points this year. Capital costs are higher. So there are signs of fatigue. Whether that translates into opportunities is yet to be seen.
David, thank you so much.
Thank you.
And for more on REITworld 2018, be sure to visit NAREIT's website, REIT.com.